Not sure where you're going to find hundreds of thousands of dollars to start flipping houses? I'm going to give you 3 resources that you can use today to start flipping houses. Here we go. Hey guys, welcome back to REI Simplified. I'm your host, Adam Johnson, where we break down complex real estate situations and scenarios for people like me and you, the beginning investor. If you guys haven't already, please like and subscribe. It really helps the channel, helps us get in front of more people to help more people like you and I. Today we're talking about funding. The biggest part of real estate is finding the money to be able to go into find these deals and flip these houses. It does you no good to find a deal with great numbers if you don't have the money to back it up to be able to pursue the opportunity to flip that house, to sell the house, to keep the profit and move to the next one. So today I'm going to cover 3 resources that you have at your disposal today to be able to get into real estate and start flipping houses. Now let me just say, there are many more ways to find money. I'm going to give you 3 basic ways, so don't think this is a end-all be-all. This is the beginning of helping you to find money. First thing first, we're going to talk about the most common, which is a bank loan. Your everyday bank, they're sitting on millions and billions of dollars that they want to fund. In my experience, the smaller community banks are the ones that are most likely to be able to fund or want to fund your transactions. Your small local banks want to invest in their local area to bring up the area, to bring up the cost of living, the quality of life. So they want to invest in their local areas. I use US Bank here in Clarksville. I use F&M Bank here in Clarksville, Tennessee. Been very, very helpful, very, very friendly. As a contrasting example, USAA, who I do most of my banking with, they do not offer small business loans and commercial loans for flipping houses. So, as I said before, the smaller banks in your area are going to be more likely to help you when it comes to those small commercial loans. So here's how it looks when you go to a small bank and you ask for a small commercial loan, okay? Generally speaking, this is just general for all the terms I'm going to discuss today. Generally, a bank will give you 80% of the purchase price and 100% of the rehab costs. An example is, I have a house that I'm purchasing for $100,000. The house is going to require at least $30,000 of rehab costs, okay? The bank will give me 80% of the purchase price, which is $100,000 in this case. So I got to come up with the other $20,000 because the bank will give me $80,000 of the $100,000. All right. So they bring 80% of the table. I bring in the 20%. Now the rehab cost, as I said, was $30,000. The bank will give me all that money as well. So in this example, for a house that I'm going to acquire for $100,000, put $30,000 into it, the bank is going to give me 80 plus 30 equaling $110,000. I got to bring $20,000 to closing costs for the closing to take place. So I get to acquire an asset, control it, flip it, and I put $20,000 into it. That's pretty powerful. You can get creative down the road, and you can even borrow that $20,000. You literally do not have to bring your personal money to any of these closings, but that's for a different video. Today we're talking about basics to keep this very simple. So a commercial loan with the bank, generally they'll give you 80% of the purchase price, 100% of the rehab costs. Now, what are the terms on that? Usually you're going to have about a 1-year, 12-month term on that commercial loan, usually. So what happens when you flip a house and it doesn't sell for those 12 months? You can refi it or you can sell it to someone else, but the bank, they want their money in that year. So if you borrow the $110,000 at the 12th month, they want to be paid in full, or you have to go in and renegotiate, and there may be some more expenses included. So generally you have the 1 year. Your interest rate is going to be good, but not as good as it would have been if you were an individual buying a house for you to live in. Right now in my area, the interest rates are about 2.5%. That's within about a 0.5 error because it's changing every single day. Right now, I can probably get a commercial loan at about 5.5%, 6%, maybe a little bit higher. So your commercial loans are going to be very competitive with the other types I'm going to talk about here in a minute, but they're not going to be as good. Now, here's what I tell my clients when it comes to interest rate. Do not get wrapped around the interest rate, okay? That is the cost of doing business. If I have to pay a bank 5, 6, 7, 8%, but I still make my money, I don't care how much I have to pay them. At the end of the day, when I run my numbers, am I profitable? And in most cases, if I'm not profitable, obviously I won't even take the deal. So when I run my numbers, I'm also calculating the bank cost along before I even make my offer for this to flip this house. So it's gonna be easy to get a commercial loan. Usually, generally speaking, it's gonna be easy to get a bank commercial loan. It's gonna have a 1-year term, usually a pretty decent interest rate. By the way, you're gonna pay monthly to the bank. In those 12 months of you paying to that loan, you're going to pay interest only. So if you borrow $130,000, at the end of 12 months of you making those payments, you still owe $130,000. Again, that's the cost of doing business. You have to pay to play. So bank loans, commercial loans, the easiest, most common way to find money, but you also have to qualify. So when you deal with the bank, you have more red tape, more obstacles to get around, more restrictions, more requirements. So keep that in mind as well. When I got my very first commercial loan with my business had no history. So my business didn't have a credit report or anything like that. So I, the individual, co-signed or guaranteed the loan for my business, but my business still owns the property and still got the loan out. So that's how you have to start sometimes. You gotta kind of risk a little bit to make the bigger profits. The next thing I'm going to talk about as far as opportunities to find money is private money. Now, what does that mean? That means an individual, a friend a family doctor, someone that has money sitting around that's not working for them. You can work directly with that individual to borrow money for a flip, to borrow money for a rental. But you can borrow money and it's got to be obviously mutually beneficial. But you can borrow money from a family friend. I've borrowed money before, and it doesn't have to be for the entire portion. You don't have to borrow $100,000. You can borrow $22,000. You can borrow enough to put the down payment down. You can borrow enough to complete the rehab cost that maybe you weren't aware that was gonna present itself. So you can borrow money from a private money lender, and one of the reasons I love doing private money lending or borrowing from a private money lender, there's no red tape. There is no guidelines. It's what you and that lender agree to. If you agree to a 4% interest rate over the next 6 months with a cash out of X and so on and so forth, that's between you and that lender. Now, there's many more documentation or documents that go into a private money lending deal. They're going to be a lien. They're going to have a lien on the property. They're going to be on the insurance. There's many more moving parts, but at the end of the day, are you getting the money? Can you go flip that house? And yes, you can. So private money lending is a great way to acquire more funds. And again, what I've done before is I borrowed as little as $5,000 before, paid them back $6,000 in 2 months. So you can be creative. It's very beneficial for, like I said, for you and the lender. So enough about private money. The next thing I want to talk about is hard money. All right. And let me just say about hard money. You probably have heard this term before. The difference between hard money and private money and a bank is your hard money is going to be much more expensive. Okay. Your hard money loans are going to range from 9% interest to 15, 18% interest. On top of that, your hard money loan usually is going to have points up front. What that means is 1 point equals 1% of the loan. So for example, if I'm borrowing $100,000 at 3 points up front, that's 3% or 1% times 3. So that's 1,000 times 3 is $3,000. So 1 point equals 1% of the total loan. So like I said, most of the hard money loans I've dealt with have a point system between 2 to 5. They generally have a higher interest rate, and they generally have a shorter duration. I've seen them between 6 and 12 months, give or take, but some are even shorter than that. Now, what happens when let's say I have a duration with 6 months with a hard money lender, and for whatever reason my flip just didn't sell, or we come across issues, or for whatever reason we didn't get finished flipping it. At the end of that 6 month period, I have to cash out by getting another loan, or maybe reconstruct that loan to push it out a little bit more. But again, anytime you have to restructure a loan, whether it be with a hard money or a commercial bank loan, you're going to end up eating a little bit more cost. But like I said before, even with a hard money loan, even with them having higher interest rates and points up front, at the end of the day, am I profitable? At the end of the day, that's money that I didn't have before, and that's the cost of doing business. So I don't mind paying the bank $5, $8, $10, $15,000 if I can make $25,000, $30,000. Weigh the pros and cons. Look at it as, without that hard money, without all the additional costs, I have no money to go and use to buy that flip opportunity. Okay, so please don't get wrapped around the cost of money as far as the loan and the fees and the interest and the closing costs, all that kind of stuff. Be happy and joyful that someone is lending you the money, giving you the opportunity to go and buy your first, second, third, or fifth flip. Even today, we've done many flips, and I still never use my money. I still will go get a commercial loan. I'll talk to private money lenders. I'll even get hard money, but I still will not use my personal money. And there's another video for that as well, as far as liabilities and legalities and that kind of stuff. So, guys, that was a really quick video, straight through, no editing, for 3 ways that right now you can find money to get into real estate. There's more. Like I said, there's lines of credit, there's cash out refinancing, there's so many other ways that you can get more money. But for this sake of this video, I want you to be able to have an actionable, event today. And right now today, you can go to the bank. Right now today, you can start calling family, friends, and right now today, you can get online right now and Google hard money lenders in your area. You can do that right now. So I hope you guys got something out of this. As always, my name is Adam Johnson. I'm the president of Johnson Property Investments and the creator of REI Simplified. If you haven't already, please like, subscribe, share with a buddy. Why not? It's free. Until the next video, we'll see you guys later.